from redefining banking, we're now going to rethinking revenue models and business models in general. You'll be hearing some of these buzzwords: beyond banking, embedded banking, increasing collaboration, AI and data, improving efficiency, customer satisfaction. Are you all tired of this buzzword game? Yes, me too. So let's get more into the content and get more juicy insights. And Oana Ifrim, lead editor at The Papers, will be leading you through this session. Oana, big welcome.
It's a pleasure to be here. OK, let's move straight on to Beyond Banking, unlocking new revenue streams and business models. We've got a great lineup of experts here today, and we'll be diving into some exciting shifts happening in financial services, particularly around how banks, fintechs are collaborating to create new opportunities and revenue streams. So let me quickly welcome our panelists on stage. We've got Oliver Mohseni, co-founder at Fruda. We also got Roger Berger, head of fintech at BNP Paribas. And last but not least, Igor Tomych, founder and CEO at DashDevs. So please welcome our panel, please. Welcome. Nice to see all of you today. So before we dive in, I'd like to ask each of our panelists to very briefly share a little bit more about themselves. Closest to me is Oliver. Oliver, would you like to go first, please?
Absolutely. Is this is on?
Yep.
Can you hear me?
Yes.
Good.
All good.
Hi, everyone. So my name is Oliver. I'm one of the co-founders of Fruda. And Fruda, we work with SME lending. So that's the only thing we do, credit and lending products for small businesses, focusing on embedding that product and that capability for our partners. That could be banks, neobanks, payment companies, accounting firms, really trying to bridge the gap that most small businesses experience when it comes to finding external financing. We're licensed by the Swedish FSA, so basically regulated as a bank, and with the support of the European Investment Fund, we're really trying now to scale outside of the Nordics and into more and more European geographies. With the mission to make financing easily accessible at great terms for all small businesses.
Thank you so much. Roger?
Great. Hi, my name is Roger. I'm with BNP Paribas, and I co-head the fintech sector across EMEA. In essence, what we do is we work with founders and investors on fundraising equity. In addition, we also fund asset-generative portfolios or fintechs that generate assets, deploying our balance sheet. And ultimately, we use our infrastructure or deploy our infrastructure to help fintechs comply with the regulatory requirements. And super excited to be on the panel and super excited to be here today.
Thank you.
Hello, my name is Igor Tomych, and I'm CEO at DashDevs. And I'm quite fortunate because I would say I'm a T-shaped expert. I used to be a developer, and I have really good vertical with understanding how technology works. And last 10 years, we helping as a company to a lot of different fintechs, from regulated entities to the smaller institution. We have a lot of overview how they thriving, how they developing their business models, what are the challenges and what worked well. So today I will be glad to share my experience and knowledge about the platforms.
Thank you so much. I think one thing I love about this panel is that oftentimes you bring a group of experts from different backgrounds with different perspectives, so I think this is going to be a very interesting panel. OK, so we're going to look at some trends to start with. So we all know that banking is changing faster than ever. And Roger, let's start with you. What do you see as, what are the biggest shifts happening right now in the banking, and maybe what trends are proliferating in the banking space right now?
Yeah, so I think if we look at the use of data and how data is driving the development of products, but also the distribution of products, that's fundamentally changing. So specifically looking into the B2C space, so how do banks and financial institutions distribute solutions and products to consumers? We see neobanks entering the space and using data to hyper-personalize both the experience, but also the products that are developed. So if we think about it from us as consumers and users of social media, now you can argue, is what social media doing cocooning us in a, in a very unique and hyper-personalized experience? We'll push that idea to the side, is it good or bad? But if we focus on the way that we consume social media, and if we take that and extrapolate that and bring it to banking and creating similar experience as Instagram does for us as individuals, if you have a similar experience in your banking app through the use of data, then consumers have actually come to expect that. So a lot of times when we use traditional banking apps, we feel that they're a bit clunky, and everyone has the exact same experience. Whereas if we use apps of neobanks, and the more successful neobanks tend to cocoon us into a very unique and unified, hyper-personalized and contextual experience. And I think that's the fundamental shift we've seen really over the last 12 to 18 months, whereas before those apps also were very similar. But the last 12 to 18 months, we've really started seeing a shift into that space.
Can I also ask, how do you see it from a banking perspective? How are banks adapting their business models to collaborate with fintechs?
So I think when we look at, I think it really depends what a bank does, and it's both geographic reach but also product reach. So different banks will choose to collaborate differently with fintechs depending on their historic product reach, but also the historic clients that they cater to. So I'll give you an example from us out of the corporate institutional bank where my team and we sit. We historically looked at how fintechs can digitalize the B2B experience, which is very different from how our consumer part of the bank will look at things. But ultimately, we feel that, so to give you a concrete example, our global markets team felt that the way to distribute their products and solutions to SMEs, but also to medium-sized and large corporates, could be enhanced through an acquisition that we did, Cantalks. So there, if you look at how that relationship kind of came into play and how that partnership came into play, it very much came into play by testing to see if the solution that on paper looked great initially, proposed by the fintech, if indeed it matches the needs of our global markets team, and doing some tests in individual geographies, and after doing those tests, it kind of evolved into a full-blown partnership, and which ended up in an acquisition of the company.
Thank you so much. And I would like to ask Oliver and Igor a question, because we know that traditionally banks and fintechs were seen as competitors. And how has this dynamic has shifted? Are they competitors? Are they partners? Or is there something in between now?
Yeah, or maybe all of the above. So I think Roger pointed out earlier, I think we can be a competitor in some instances, but very much a partner as well. I think especially Fruda is a very complementary product to what banks offer. So for us, it makes sense to view the banks as partners, to reach as many SMEs as possible. And of course also a customer. So there's kind of three levels to it, I think.
Okay. What do you think?
And I think right now we see that everything is getting much more complicated. So it cannot be read as one statement, competitors or collaboration. I think depending on the configuration, it's different approach. Like in United Kingdom, it's frankly open information that any retail high street banks, they will not open segregated accounts for the fintechs, because if you're running as a MEI, you will not be possible to open an account and operate. So you need to go to institutions like Clearbank for having your financial infrastructure, which kind of competition. But on the other hand, banks are trying to expose their products, APIs, infrastructure, and technology to be the part of the fintechs and be the part of innovation. So I don't think it's quite straightforward. I think it should be put that the overall complexity of the market is growing really fast. And depending on the appetite of the institution, they rather cooperate to create more and become more successful in this environment, or they kind of trying to be more traditional and saying, okay, we've got something that we can monetize and trying to keep the area safe from their side. But everything is moving, so there is no way to be where you are without running on the same time.
Maybe just to add, you can also use BNP Paribas infrastructure, not just Clearbank infrastructure.
Thank you so much. And if we look at bank fintech collaborations, can you maybe, all of you, can share some examples of things that worked and what didn't work, or maybe successful collaboration and in what areas?
Maybe, sorry, I will go with the example once again with the Clearbank, because in the United Kingdom, a lot of stuff is happening, a lot of innovations. And one really good example, because nowadays it's really even hard to put the line what the bank is, because you have institutions who have the full retail banking license as a Clearbank, but they never aim to be the retail or high street bank. What they do is they working as a processing or clearing house, one of the five in the United Kingdom. And they initially targeted for the fintechs to become the infrastructure. So in one hand, officially they bank the bank because they have the license. But in the other hand, when they came to the market, they never envisioned to become the existing traditional bank. They invested into being new platform for the future fintechs and future projects. So I would say that's one of the really good example of rethinking what is the business model and leveraging existing licenses, existing market to provide much more to the customers on the market. Because nowadays, I think around 20% of the customer accounts for the faster payments, one way or another, are opened by Clearbank, because Alika Bank is using them, Chip Financial is using them, and that's really good example when you can, by collaboration and innovation, take a significant share of the market.
Should I go?
Yes, please.
Yeah, I'll use an example from Fruda then. So for us, I think a great example of a collaboration is with the neobanks. So I'll take a local example. So with Contist, which is a really nice app for small businesses. It helps with tax planning. It gives them all kind of the essentials in terms of an account and a card and everything to kind of start and run your business. And then where we kind of come in with Fruda's product is that we have a fully white-labeled integrated business loan, which is typically what, after the account and the payment capabilities, what you need as a small business to be able to scale and grow and invest. And I think that's really cool that we can complement them with that single product, and they can keep aggregating and building from kind of a niche offering as a neo-digital bank. They can now aggregate and become more of a full-service provider.
Fantastic, thank you.
Yeah, maybe just to add from the acquisitions the fintechs that we've acquired, and there's a long list of them, but just to name a couple there, we've got Nickel that we've wholly owned, there's Floa that we wholly own, I mentioned Cantox a little earlier, and I think there's one thing in common across all the acquisitions we do in the fintech ecosystem, or from the fintech ecosystem, and it is one, we keep the founders on board. We probably over-communicate and really make it clear what our expectations are. We pre-test before we acquire, so we enter into partnerships to understand if there is a mutual fit. And ultimately, we allow the fintechs that we acquire to continue to strive in the initial phase on their own merit. So we give them support of the BNP Paribas network, but at the same time, we don't impose on them on how to operate. And I think this is crucial to keeping the founding team and also that initial agility on board, but ultimately also to successfully integrate them over time. So I think that's, back to your point on collaboration, acquisition, partnership. I think the key to that is to know what you're getting yourself into, who you're acquiring or who you're partnering with, and the testing helps, and equally clearly and over-communicating expectations both towards the founders and the fintech as a whole, but equally also listening to the expectations that founders have post-acquisition.
Fantastic. And one thing everyone is talking about right now is embedded finance. I mean, in every discussion, you'll hear about AI and embedded finance. And I wanted to ask all of you, we know that embedded finance is now everywhere, whether it's in lending, whether it's in payments. And I wanted to see how does embedded finance impact the future of financial services, and why is embedded finance so important right now? Oliver, please.
Yeah, I think we are going to continue to find financial services in lots of different places, not only the bank. And we've seen it, I mean, for a long while now with payments. You have payments integrated in every app and every platform, basically. And I think, of course, being a bit biased, but I think lending is going to be the next thing. Just like with payments, you're not really interested in how things are getting paid. You want to order a taxi, and that's what you're focused on. Payment just comes along, and that's basically solved today. That, I think, is going to happen also in the lending space. So whenever you need credit, it will just be there for you to be able to do the investment you're interested in doing, or pay your bills whenever you need to do that. So I think this integration of financial services in more and more platforms will continue, and we will see that speeding up. And I think that would also now go more and more from the consumer space to the B2B space.
Any success story that you already see in the market?
I mean, you have the old classical ones like the Uber one. I think that's a great example of embedded finance where payment just occurs in the background. You never have to bother. I mean, also like all the BNPL solutions you see now when you go shopping, it's super convenient to actually pay for the merchandise you buy. And I think that's just going to expand. So you're going to see that everywhere. And in the B2B space where we're operating, we're now seeing more and more of that in accounting software, payment platforms, also neobanks. I believe also the incumbent banks are going to start integrating more and more. So yeah, I think we've only seen the beginning.
And Roger, how do you see the future of and the role of embedded finance?
Yeah, no, I mean, you've said a lot, maybe all, but just extending a little bit on that. I think ultimately it's user-driven, and I would say consumer, but user-driven. So I think the way we live our lives today, we expect to find what we want on our phone, be it whatever, right? From traveling to booking a flight to expenses, etc. So I think finance is moving to exactly that, where we as users, B2C or B2B, are demanding to have solutions on our phone, and ultimately embedded finance is doing exactly that. It's bringing those solutions that traditionally were, if we go back maybe like 20, 25 years, and you went to buy a car, you paid for it in cash, maybe you paid for it in credit card, and the revolution back then was that you could lease and you could sign a leasing contract at your car dealer. Today you don't go to a car dealer, or the majority of people don't go to a car dealer anymore, they go online. So that leasing contract that was signed at the car dealership now has moved and it's become embedded in the online shopping or purchasing experience. And I think, like you said, we're going to see more of that. And if you look at what we are doing as an institution, we've acquired Floa. I mentioned that earlier, and Floa is a buy now, pay later player that provides split payments or pay in three, specifically in the consumer space or for online merchants. But I think even going beyond that into the B2B space, what's super exciting is what some of the largest marketplaces and online merchant platforms are doing is providing financing to their merchants where they need it, and that is in the merchant portal. So working capital is not being provided via a traditional bank, but that traditional bank will provide it to the merchants via the platform. And I won't mention any specific names, but there are some very advanced, both US and European online platforms and online shops that allow merchants to finance their working capital right then and there.
Fantastic.
And I'm always starting with the definition, like when we're talking about embedded finance, what exactly it means. Because if we take a look, it's something when you have the financial services into the process that you might not even expect. And I think it takes us to the broader picture, like imagine tech giants like Google and Apple. They already leverage in embedded finance by providing the card, Apple Card. And today Visa is fighting with a 1 million or 100 million deal to replace the MasterCards with the Visa with the Apple. So I think the picture is much, much broader than just incumbent banks, fintechs, and bending the payments into the Uber, because everyone would like to keep their customers, and it's unavoidable by providing the financial services as iOS. You have to P2P payments into the iMessage, you have the cards, you have cashbacks, you have loyalty programs. So I think it's much more than just the financial sector. It should be aware there are tech giants who are looking to have their customers and embed the financing into their business processes. And it's even happening vice versa. Like one is Uber payments. Like we have the payment. You are kind of putting your card. But there are reverse embedded finance examples when the certain delivery platforms, they integrate in banks to onboard their customers through the delivery application to open the banking account or card to use for the loyalty and cashbacks. So I think that's once again comes with the complexity of the processes, because if we take a look on the applications and business process online, like a digital banking 10 years ago, it was simple because it was simple. And right now it's complex and everyone tries to make it simple. And by embedding those services, it makes much more convenient for the customer. So I think the complexity will grow and the need for the simplicity will grow too, because it's not possible to keep all the applications, all your accounts. You would like to have it in one system, like Apple Pay. I would like to have my Apple ID and I would like to pay with it, and I don't want to know which bank I'm using right now or which card. I want to do the P2P payment. So I think that's a huge, huge focus on that, and that's kind of how ecosystem will work in future.
Mm-hmm.
Yeah, I couldn't agree more. What we're seeing is an amalgamation of traditional tech companies, software side, hardware, financial services, with all the players looking and working on solutions. Again, bringing what you said, bringing that experience to the user, again, B2B, B2C agnostic, where the user expects it. And indeed, you mentioned a couple of the Magnificent Seven. They are absolutely looking at embedding or bringing fintechs on board to provide those solutions where the users want it.
All right. And I would like to ask Igor another related to fintech and the disruption of financial services. And I want to, maybe this is a little bit thought-provoking, but I will ask anyway. So what do you think makes fintech disruption possible in areas where banks have been traditionally dominant?
I think on one hand it's simple, but it's really hard to change it for incompetent banks or high street banks. That's organizational structure and the aims for the results. Because in software engineering, you can easily understand how fast the product will be developed and delivered by the structure of the team. And the banks, they traditionally built across the silos, like onboarding, accounting, I don't know, something else. And it's always structured not the way how the new organization structured. So it's a play against the structure of the company. And as a result, I think that's why the banks, they kind of lost the battle for the buy now, pay later products. It's not the question they didn't have the technology or an understanding of the scoring. They lost this organizational structure because they do the development as they used to do, I don't know, 30 years ago. We have a floor full of developers. We have a lot of different silos who are telling us how it should be working. And then it doesn't work as an end-to-end product, which is different right now with the fintechs. They structured as, I don't know, startups in Silicon Valley. I have a few people who are T-shaped experts. They understand what to do end-to-end, not just technology, but the business. And then it rolls faster. They, with a continuous delivery, I don't know, builds, releases into the production every 2 weeks. I hardly seen the retail banks who are updating their mobile applications, I don't know, every 2 weeks. And I have a friend who is working at Facebook, and they releasing the application twice a day. So that's a difference. That's an appetite. That's an approach.
Mm-hmm. Any thoughts on this?
Yeah, I think the way that founders approach solving problems or building solutions is very different. Like you mentioned, you've talked about how traditional banks and insurance companies approach it. I think the way founders approach it is they very much focus on build, break, fail, build, break, fail in super quick cycles. You mentioned 2 releases a day. 1 release a week, seeing what works, testing it, failing. And I think there's one aspect that is fundamental, is the reputational aspect. I think if a small, unknown fintech fails, it can fail hundreds of times and then be successful. If a large bank, loses hundreds of millions of customer funds because of a failed release, it will be all over the press. So I think there's also, the reputational aspect which differs, which allows founders to fail, build, fail. And that's also a reason why we allow, the fintechs that we purchase to continue operating in their initial space to, allow for that cycle of building and failing and building and then succeeding.
But I would like to comment, like everyone knows how Silicon Valley Bank collapsed in just a week. So it's not that banks don't fail. Usually they supported by the government and they support because they kind of affect in the market. So once again, it's about your implication and how you affect the market. You will be supported if you're big one, and no one cares if you're small one. So I think that's once again comes with the sizing.
One final, we can spend, we can go on and on this topic, but one final question, because I mentioned AI, and I really want to talk about AI today. And I would like to ask Oliver, how do you see AI transform? You mentioned SME lending as a key topic for you. How is AI transforming the
I think machine learning and AI has enabled us in many ways. I think one thing that we needed to do different was around the scoring of the SMEs. So we wanted to be able to help more SMEs and to understand them in a better way. So we leveraged transaction data, which is rich data, but very unstructured. So we needed AI and machine learning to make sense of that unstructured data, structure it, and by doing so, we can now score the customers based on their transaction history and not just kind of the typical balance sheet focused scoring. And so for us, enabling Froda to help much more micro businesses in a way that traditional financial institutions couldn't. But then, there's lots of applications, of course, to it. But I think that's been key for us.
Mm-hmm. Mm-hmm.
Yeah, maybe just to add, I think there's a lot of hype around AI at the moment. But if we look at the most successful historic fintechs, and I'll take PayPal as an example, PayPal in the founding years was losing $10 million to fraud a month. And before implementing any machine learning and data analysis tools to prevent fraud. After implementing it, it went down to a minuscule amount, and then PayPal is what it is today, gone through listing acquisitions and so forth. So I think the most successful fintechs historically have used machine learning, and now with the more recent models are able to even continue on that success story and build off the most recent models and use machine learning. So what I'm trying to say is I think it's not something new for the successful fintechs, but it's something that they're accustomed to for many years and have used it in a plethora of either fraud prevention, you mentioned lending, underwriting, or now more back to my original point, now to hyper-personalization and contextualization of the user experience.
I think AI is affecting already the fintechs, but it's been there for a while. Because if we take a look, even with the digital application and services, like everyone is expecting on the KYC to be properly read as a document. And that's kind of OCR, because we've been using statistical methods to find out the information from the documents, to find out the liveness checks of the customer. So it's been there. I think there is a big trend of calling it AI rather than machine learning or statistical methods. And that's the way how the technology evolves, because we need to produce more results in the same time. And we have more data about the customer. We have more interactions. We have more integrations with the system. So it's unavoidable that we will use methods for working with the bulk packages of information. And that's kind of how AI or machine learning is working right now. So it's unavoidable.
Okay, thank you so much. A very interesting panel. So can we all agree that the future of financial services is about collaboration, smarter use of data, and seamless experience? Yes? Okay, thank you so much. Do we have any questions from the room? No? If not, I think we're running out of time. I just want to go around the whole panel very briefly, and I'll start with Oliver. What's one thing you'd like the audience to remember from this panel? One-liner, please.
I think the fact that embedded finance is going to continue to grow, and I think that payments has really proven the fact, and that lending is going to be the next big thing.
Thank you so much. Roger.
From my side, investors have deployed 65 billion in capital over the last 6 years into European fintechs. They will want to see a return, so there's a lot of exciting new products coming up over the coming months and years.
And I think that people should continue to innovate because the markets are kind of struggling and the overall visibility is in a fog of war, I would say. But despite of that, I think that's the most a fine time to innovate and bring new things to the market because people will benefit from it.
Thank you so much. Great insights. I think we are up on time. Thank you, Oliver, Roger, Igor. A big thank you to our audience as well. And if you have any further questions, please feel free to reach out to the experts after this session. Thank you so much.